Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is Wednesday, June 14th, and it is FOMC Day, big Federal Reserve announcement coming up in about 45 minutes. Remember, 2 p.m. Eastern rate hike announcement, 2:30 p.m. Press conference and Q&A. Typically, not always, but typically the directionality from 2 p.m. to 2:30 gets reversed and momentum stands firm after or during Jerome Powell's press conference. So whatever happens at the 2 p.m. mark, I am probably going to fade depending on what Jerome Powell says in his press conference. But of course, there's a lot of nuance thrown in. So it's kind of the base idea, but bias could change. Now, remember, and I'll go ahead and just go full screen for this because I think this is very important. But remember, what we're expecting today. So there's a 7% chance of a 0 point, there's a 7% chance of a 25-point basis hike. There is a 93% chance of a 0 point basis hike. Now, that is significant because you hear zero, you're like, oh, we should be bullish on that, right? Well, analysts are expecting a hawkish pause, which, pause 0 point hike, because, they're thinking that the Fed is going to set itself up for potentially hiking in July or August or September. And that is significant because if they continue to hike, then that is hawkish or bearish, to use another word. And if they do hike down the road, then, maybe we sell off from this big rally in terms of equities. And obviously, if equities fall off with crypto kind of being on the downturn, likely means that crypto will also take a hit from that as well. So when you're thinking about FOMC today, the grand words, the actionable words will be in the press conference, in which either Jerome Powell says, we think we're discussing future rate hikes, or we're leaving future rate hikes on the table. Verbiage like that is hawkish. If they're saying, we are confident in this pause, we feel that this is going to get the job done, then we're probably going to push up further. But if he is indicative of hikes in the future, meaning July, August, Q3, Q4, then that is probably going to be a bearish indication, potentially after a bullish, boost on a 0 point hike. So we don't know what the hike is going to do. It just makes sense that the hike would increase, a 0 point hike would increase price action, and then hawkish tone would decrease price action. But that's just the basic thesis. We're going to go ahead and get into that a little bit more. So we're looking at DXY. And we did drop lower as expected. We're 102.4, 102.5 is kind of in the line that I've been expecting us to hit, but there is obviously some liquidity in this area. So if we don't make it all the way back down there, wouldn't be too surprised. But we did get the drop, which coincided with equities obviously moving higher. We'll go ahead and dig into these in a second, but bit of a sell-off at that resistance level. So if DXY does reverse and make its way back up to the previous daily close, or potentially up to this resistance level, I'm expecting risk assets to take a hit from that. And it's basically how we've been looking at DXY. DXY moves lower, risk typically moves higher. DXY moves higher, risk typically moves lower. Not 100%. But typically how you look at it. So if this moves lower, I'd expect equities to break above that resistance level. If it moves higher, I would expect equities to obviously move back down. So that's kind of what we're looking at for DXY. Moving to equities, we basically, every time it's broken resistance, it's firmly held or it's turned it into supports and then moved higher. So if you have been trading longs on equities, well done. Congratulations. I'm very happy for you. But we must consider, and I'm going to go ahead and get rid of a few of these because we already hit that. We know that we need to break above 38.88 or 43.88 to then start moving higher towards, I think, 4,400 and 4,420 will both be psychological targets. I have no doubt in my mind. But if we get rejected here, then we're going to move back down to this level, which happened. So all the price action for the immediate quick price action already played out that we told the TTC community: get above this level, tag this level, get rejected at this level, make it back down here. So that's done. So now we've got our range today, right? This is our range. So break above, 43.88, move higher to 4,400, maybe 4,420, break back below this area right here. And then you're probably going to drop, maybe the weekly view up first. And then, I would say 43.30 is definitely likely, just given the interest and liquidity right here. We do have a gap here too. So if it breaks below this level, you'd probably expect a nice size wick down here as well. So, and of course, it's selling off, it had a nice little wick right there on the hourly, selling off back down to the daily close right before FOMC. Remember, FOMC is in 40 minutes. So this is very interesting. And this could be, an early signal of a potential sell-off coming, but I think you're better off waiting for FOMC and judging based on the support and resistance. This is resistance. This is support. Break through it, short, break above it, long. And, pretty simple there. So in my opinion, I could definitely see on a 0-point basis hike, equity spike back up to grab this liquidity up here and then trickle off and fall back to this level, potentially lower, depending on how crazy things get. So in my opinion, you're better off holding off here until FOMC, wait for break higher or break lower, and then you've got your shorts and your longs pretty much already mapped out there. So looking at Bitcoin, very little movement since we talked yesterday. I think this is right around when we talked. We of course have been bearish, but we did note that if it got back above the 25.8 level, maybe it would jump back up to the 26.1 level. We obviously got all the way up to 26K, but immediately rejected pretty much every time it tagged that level. This is definitely, we got the higher high here, but then we got the lower high. We got an equal high. This could also be a lower high right here, just based on this wick rejection too. So it's not looking positive for Bitcoin, but again, very similar to yesterday. If crazier things have happened. And so what I would kind of expect around the FOMC is 0-point hike. Maybe we spike up here, grab this liquidity up here, and then, then we move down something like that. And if we immediately recover up here and re-grab 25.4, then I think this is probably a really good long spot. I mean, probably not all the way out into Thursday or Friday, but imagine this drops back down, and then as soon as it reclaims this level, so not at the break up, but as if it does something like this, I'm probably going to long that. And then of course, if it's on the reverse, let's say we do something like this, and then we grab this area, we come right up above it, but we go right back down, then that's probably another good short opportunity, at least down to whatever low is, possibly targeting down here. So you have to remember, every time, if we form a new low and price reverses back, a lot of times it'll quickly re-grab that low. I actually, the reason I think, other than the whole FOMC is typically, it's a 3-tap. So we got the 1, we got the 2, and we got the 3 here. We only have the 1 and the 2 here. These lows are completely untapped. So it would make sense that we grab this area, and then whatever happens right around here would be a really big decision, because it's around these lows. And if we come back up, then that's a really good long. But also if we get, if we make it lower and then crab back up and then get rejected, then that's a good short down to this level. So, that this is, if we make it down to 25.4, this is going to be a really critical price area, or really critical area for trades, because, you either have a really good long opportunity or you have a good short opportunity, and you could have both depending on however price action lines out. So if we make it lower and we reclaim, probably would expect, some sort of double bottom there, but you'll have to realize that for yourself. So a lot of times we'll do this, in terms of retagging that area. It doesn't need to happen, but certainly an idea if we do make it to that area. ETH looking a lot more weak than Bitcoin, and as you can see, kind of for the first bearish scenario already playing out for the TTC community. We said, break below, I forget what the number was, maybe 1738. Then we are expecting 1720. So getting close to that 1720 level. And then obviously, below this liquidity here, if you break below that, then you're probably just going to end up slicing down to 1686. And just to note, similar to Bitcoin, the 1720 area is very significant, because we could come down here, sweep this, grab this area right here and flip it, and then this is a good long opportunity. So this is a really good short target for now. I think, 1686 certainly is in play to get down if we have a bearish event. But we also have to recognize that if we sweep this liquidity and hold the 17, I don't know, 1715, 1720 level, if we hold that and then move higher, then this liquidity up here is, an easy first step, maybe all the way up here. But then we just grab this liquidity and we move higher. So, if you are ultra bearish, and I am actually feeling pretty bearish today, but that's also what scares me is, a lot of people are bearish. So maybe we just grab this liquidity and then move up like that. So I'll be vigilant for that, probably taking closing some trades, at these, if we get the lows for Bitcoin and ETH, I'm definitely closing some of my trades there, and then I'll probably let the rest ride. So just think about that in terms of how the volatility may negatively impact you as opposed to just positively impact you. So always have a plan for whatever will come, because today is going to be an annoying day. It's not, I have a feeling it's not just going to go straight down or straight up. It's going to be a little confusing. So that is really it. I'm still feeling bearish. I mean, if you're watching this chart, that's not confidence inducing, but I will say the fact that it's held this level right here is certainly, positive. Could this break higher? Sure. But is it likely this type of formation to break lower? Yes. So, but instead of breaking lower, it could grab this liquidity and fake us all out, which is something we very much need to be aware of, and something I wanted to let everybody know heading into today. So keep a close eye on equities, because I'm not 100% sold that it's just going to break below this level just yet. Even though that is a pretty gross doji. The follow through, you would really want to see a break of this level. If it holds this level, it's probably going to run up and grab this liquidity again, which could result in it obviously heading higher. So very much something to be aware of on the equities chart. But in my opinion, I am a little bit more bearish on crypto, just with the everything, floating around in terms of Binance and stuff like that. But I certainly could get faked out. So if you're like Nick, I'm not bearish, don't only show me the bearish, side. Well, on the bullish side for Bitcoin at least, and let's go ahead and normalize this a little bit. So what I'd want to see is breaking above this level. This level right here is very important, coincides with the previous weekly VWAP, also the 1 hour estimated 200 moving average. And obviously every time it's gotten near this level, it's been cut back down. So if we can get above, pretty much 26.1, 26.2 is really the line in the sand. But let's say 26.1, 26.2, flip that level into support, then 26.5 is in the cards. And obviously get above 26.5, then you're talking about at minimum this liquidity, or potentially as high as that liquidity. So maybe, maybe 26.8, maybe as high as 27.4. But that's what I'd look for on the bullish side is a break above 26.1, 26.2. Really 26.2 is that line in the sand, in my opinion. Get above that, then you're probably heading up here, and then have a chance to head up here. But then also, if you get up to 26.5, then maybe that's just deviating. This is the range right here. Maybe that's just a deviation. And then this is what sends us lower back here. Because remember, we still have these untapped lows, and typically we will end up tapping them regardless, whether or not we see a move higher, just like you saw here. 1 tap, 2 tap. A lot of people are like, oh, we're going to tap these lows. We're going to tap these lows. Well, it took, 4 or 5 days, but we did it. So it's also something to monitor here. That happened on Saturday. So we're already getting into 4 or 5 days. And so that's very much something to be mindful of. And then let me just get rid of a few of these because chart's getting crowded. Then we'll go over the bull case for ETH, and then we'll wrap it up and get ready for FOMC. So bull case for ETH, in my opinion, you've really got this trend here. So this trend is kind of really your friend. What you have to do is obviously get above 1760 and ideally get above 1780. But, your first signal would be getting above this trend. And so getting above this level right here, 1748, flip that into support. You're above the trend. Now this is your target. Get above that. Then you've got 1780. And obviously get above, you've got the 1 hour estimated 200 moving average here. So get above 1780. You've got a lot of room to roam. There's, this isn't really a full gap because you've got this price action here, but get above 1780. You definitely got some trading room up to these liquidity areas, which don't look too bad. But again, not really feeling that direction, but I do want to let everybody know what could happen if I am wrong. So you have the full trade perspective. So personally, again, I'm feeling bearish, but we definitely could see a spike at FOMC. But I believe if we do see a spike up on FOMC, it'll probably get sold off during the presser and after the presser. If we do see a spike lower on FOMC, I'll probably start selling off a lot of my positions because, again, I'm still sticking to the thesis that whatever happens at the announcement, better to fade into the presser just based on historical reference and the fact that we're expecting kind of a dovish action from the Fed, meaning a 0-point basis hike, but then hawkish language towards it, which is obviously on two sides of the spectrum. So good luck, happy trading. We'll see everybody tomorrow for Trading Rebellion. And please don't get too crazy with FOMC. I don't want everybody, to get too overextend themselves too much. Today will be a good volatility day, but it's also a difficult volatility day. There will be lots of volatility, but doesn't mean it's going to be easy to trade. So I just want everybody to fully understand that and get ready for the task at hand. So good luck, happy trading. See everybody tomorrow.